Welcome everybody to an evening edition of the Quick Hit Review video. We are the 27th of January and just as a reminder to those people that are not aware, we are due to leave the EU at the end of the month. So I would be very cautious with some pound pairs. I actually don't think we're going to see any movement. I think it's already priced in. People have been aware now for a long time that we're going to see this us officially leave, so nothing will happen other than paperwork will pass through to say that we've officially left. So I can't see that there's going to be any big movement, but nevertheless there has been quite a lot of uncertainty around Britain leaving the EU. So for me personally, I won't be in any pound trades come the date of leaving. But I haven't done a quick hit review video in a while. A lot of you know I've been very busy. Well, my house is now sold in Spain. I'm now officially back in the UK, and I'm very, very busy. However, I do want to run through a few trade setups that I'm looking at. A couple that I didn't take. The reasons why I didn't take them. And let's start off first of all. Then let me run through a few of these currency pairs. New Zealand dollar, New Zealand yen. Okay, we've got a very nice flag pattern setting up on the dollar yen. I'm going to do the higher time frame analysis for you guys. You guys that don't know how I personally work flag patterns, I'm going to run through how I do that, what I look for, what the rules are, how I'm going to get my entry, and how I'm going to play for potential targets. So, out on the dailies. Okay, bigger perspective here, there is not a great deal that's been happening. We moved higher, we had a pullback, and then we moved higher, a pullback. We did not make a new high there, we did here, then we saw a pullback, then we came up to equal highs just here, then we had a break below, close below, and then boom, we rallied up to this level. So there's no trend here, guys. There's nothing but consolidation for me. What we have done though is right here, you can see there is a gap in the market, and we physically gapped lower here. So I'm going to just, my laptop wants to speed up a little. Okay, I'm going to put a structure level there and one here. Now with a gap, because we've gapped lower here, this is where we actually gapped to. So if we look at the structure level that we've just violated, we were seeing holds here. Well, this lower level here, we've now broken and closed below that. This, we've broken and closed below that. So we are at a structure level here. Let's go down to the 240. And we are currently trading at the 109 flat psychological number. Finally, the laptop catches up. Now, flag patterns, generally speaking, for me, I prefer them when they appear in trend. They're higher probability, but they don't always appear in trend. So what I do is I implement a rule where if we just violate a level of structure, a decent level of structure, or we've actually entered trend on the lower time frame, then I can look at these flag patterns. And what we've done here is we had this area up here where we went higher, pull back, came up to this level, pull back, little bit of uncertainty around here, and then at this level, boom, we violated this level of structure, we saw a pullback, and again we've rallied lower. So as you can see now, we are trading sideways. Let's drop down to the 60. Okay, and because of that gap, what you need to do is just imagine that this is one big long red candle. So I'm going to move this down to here, and I'm going to draw out like this on the closes of the candles, and then I'm going to go ahead and duplicate it and move it up. And we're going to look for a minimum of 4. 1, 2, 3. You can see we're retesting here, and hopefully we'll come up for the 4th test up here. Typically, previous structure in the wicks is where price comes to. Now if I throw a fib on from our swing high to swing low, we need a minimum of a 382 to be hit. Well, we've definitely done that. And if price was to go straight up now, unless we get a big long wicked candle, it's unlikely we're going to hit that 61.8 fib. But you never know. What we can easily do is go up, pull back, and then come up to this point here and do that. So this trade may happen in the night for me, or it may happen tomorrow. But this is the area that I'd be looking at. I am then going to be looking for a structure hold, or I'll be looking for a retest, which very often happens within these flag patterns. And because we have violated that structure, because we have a 3-point move, and if we zoom out, you can see that price closed at 108.81, nowhere near that psychological number, meaning I can take this trade as a flag pattern and play for that 127. And this trade may offer a very nice reward to risk, particularly if we go up to that 61.8 fib and it gives us some form of entry. A 3-bar reversal, of course, would be lovely. Doesn't always happen. Double tops don't always happen. But this is the area that I'm going to be looking at. I'm just going to put my alert back on there, like that. I want to be alerted when I get up to that zone so I don't miss the trade. Aussie dollar CAD. Now, this was a flag pattern which I did not take. Take a look at it, guys, though, because that's not correct. 1, 2, 3, and up here was the 4th. And if you got up there, if you got involved with the 4th test on the 60-minute, just one time frame lower, it gave you a beautiful double top. It was absolutely lovely. If I put a structure level on there though and zoom out, you can see, look at this right here, 1, 2, 3, 4, 5, 6, and then some internal structure here as well. And I was just looking at that trade, and I could have got involved with that trade, didn't. For those of you that are not aware, I'm actually in the process of changing the way I trade. So I've gone from trading a set position size to trading a percentage of my account. Based on my trading style and my reward to risk, I have worked out it is far more profitable to me for me personally to trade a percentage of my account. And just to give you an idea what this trade would have been, and again I was not in it, because I'm in the middle of changing money around. In fact, as of tomorrow, I should be back to trading, as all my money should now have hit the relevant accounts and things. But just look at what this trade would have offered you guys. And I was kicking myself, I didn't have the money in the account to do it. But 27 pips for 207, you're looking at about a 9-to-1 reward to risk. Okay, previous structure, double top. In fact, I am going to drop down to the 60-minute just so you can look at this. There we go. Look at that, guys. Beautiful double top. You could have even waited for the confirmation, which was the break below, close below. Man, I am kicking myself, because if I'd taken this trade based on my percentage and I risk 0.5% and this hits for a 9-to-1, I would have earned 4.5% back on one trade. But it was not meant to be. So do I just say that is it, that is the end of the trade? Absolutely not. That is not the end of the trade. In fact, we have a higher probability if we get a break below, close below this pole just here, our lowest structure point. If we have a confirmed break below, close below, there is a high probability that we will enter trend, because just look at this breakout that we're getting here, very directional, and I would expect the same thing here. So I'm going to be dropping down the time frames, looking for that pullback and that chance to get short. And those of you that know, I'm actually going to be trading 2 accounts, and this is where my second account will come in. So if this offers me an entry here on the lower time frame like this and a reward like that, well, not only would I have banked a 9-to-1 on my first account, but I would bank something like a 4 or 5-to-1 on my second account. And the whole point of this is, even though trading a percentage of the account, the figures stack up to be more profitable, it allows me to get involved with things like this, so I'm able to maximize the winners. And 4.5-to-1 on the first account and probably a 4-to-1 on the second account, you know, if it plays out, may earn something like 6.5% just on one trade. So it allows me to really maximize those winners. So guys, if we get a confirmed break below, close below here on the 240, I'm going to be dropping down to the 60. More importantly, it's very likely the trend will be on the 15. Doesn't happen all the time, but it doesn't need to happen all the time. You know, if I can get a 4-to-1 reward to risk on a 15-minute trend trade, which is a confirmed breakout pattern, well, I only need a few of those a month to really be racking in 5-6% a month. So I'm going to go back on here and set the alert. I'm looking for a confirmed break below, close below on the 240. What else was there? Okay, pound Aussie. I did post this one within the chat system, so you was in there, you would have seen it. A lovely, great big 240 back pattern with an internal AB equals CD pattern, completing at this 1618 just before previous structure. I am hoping that we're going to spike up and test the 195 flat, which will be the wicks, and I'm hoping it's going to give me a double top if it does. Remember, guys, I had one like this last week. It was only a small trade. It offered, I think, a 2.5, nearly a 3-to-1 reward to risk. Well, this will be more because the risk will be something like that if it gives me a double top, and the reward will be something like that, giving me something like a 3.5-to-1 reward to risk if we can get that double top. What else did we have? Euro, yen, nope, not interested, I don't think there was anything else actually. This was interesting on the pound CAD as a potential flag pattern. This could be still valid. We have actually broken out of the channel here, failed to retest the highs, and now we're pulling back. So if you can get something like a conservative entry on this, particularly now that we're down at the 17200 flat, you could look for a long opportunity. The problem is it's not the highest probability flag pattern in my opinion, but if you drop down one time frame and look for a confirmed double bottom, if you don't know what that is, go and check out the educational material. That will show you what a confirmed double bottom is. Then it will offer you a low risk opportunity, a low amount of pips for a high reward if it offers something like a double bottom. So they're the things I'm looking at, guys. I will be producing more quick hit review videos throughout the course of the week. I've got a busy week this week, but as I say, I should have everything sorted for tomorrow. My funds should be in place, ready to trade a percentage of my account, and I'm really psyched at taking my first trade. But at the same time, I'm only going to take those trades that meet my personal rules for trading with a percentage of my account, and I'll go over that a bit more in the first trade that I take.